Banking is a very important industry from a country perspective because typically, if financing is available for a country, that basically accelerates the velocity of growth.
As has already been mentioned, the Indian banking sector is vast and extensive, and therefore making sure that you play to your strengths is very important.
The people deal with us not because of the wonderful work we do only in India, but because of the brand halo and because of the governance structures and all the goodwill that gets transferred from around the world. So there is and the technology, right? We don't build our banking systems here, right? So they're common banking systems. So allocated cost, quite honestly, my sense is if we had to do the whole thing locally, in all probability might be slightly higher.
We are here for a discussion with the CEOs of foreign banks, those are operating in India. Citibank, Citi, HSBC, and Standard Chartered. All these banks are present in India for more than 100 years. Collectively, they have 400 years of existence in India. So first of all, please give them a big round of applause. The environment for the regulatory approach for foreign banks operating in India slightly changed some 10 years back, which is also a learning from the global financial crisis, when RBI decided to follow a carrot and stick approach for foreign banks in India. RBI said that if foreign banks wanted to operate in India in a meaningful way, then they should adopt the wholly owned subsidiary route. Then they will be treated at par with domestic banks in terms of branch expansion and other aspects. However, not many banks were interested in that route. Of course, recently we have a big news coming in that one of the UAE-based banks have gone for the WOS route. But the question is, with India, such a big market offering huge potential for the lenders, why have foreign banks decided to operate in particular segments? So that is the big question we will be asking to the panelists. So initially, so all the panelists will get to give their initial comments. Then we will open it up. So I can start with Mr. Balasubramaniam. Why do you think that foreign banks choose to operate in particular segments in this country?
Thanks a lot, Anujit, for having us in this panel. And good afternoon to everyone who are attending this event. I think banking is a very important industry from a country perspective because typically, if financing is available for a country, that basically accelerates the velocity of growth. So it's a highly lucrative business, but then it's highly nuanced as well, right? And increasingly what is happening is the size of the country is so big, the population we know is quite extensive. So you frankly cannot be everything to everyone in the country. So you need to create niche for yourself, you need to create your core competence and try and play to the best of your abilities. Now, if you think about foreign banks' presence in the country, I think they are very important because one, they bring the globality to the country. The network that they have across different countries in the world basically helps in terms of further accelerating the growth prospects of the country. They bring in the best practices that they're used to in different parts of the world into the country. And then they also bring in product sophistication and specialization into the market. And for a country like India, where domestic savings is not enough to take care of the aggressive growth ambitions of the country, and our government has basically gone and said that we have to be Viksit Bharat by 2047, which is like 20 years from today, there is a need for foreign capital to come in. And I think all of us collectively have great experience in terms of accessing pools of capital that we can bring into the country. So over a period of time, we realized that there are areas where we can actually compete, punch up our weight, and be really meaningful to the economy. And every bank is basically looking at those areas and trying to be competitive and be relevant in that space.
Right. Thank you. Mr. Dave.
Yeah, no, thank you and good afternoon, everybody. I think this question can be asked of anybody, any business. Why does Mercedes only sell luxury cars in India and not compete with Maruti 800? Why does Apple not compete with Xiaomi phones? You know, so I think any business, any brand, any franchise knows the areas where it can do justice to its customers, do provide value addition to its customers. So I think I don't think foreign banks as a group got together and decided we will operate in a niche or not in a niche or something. We in fact mostly end up competing with each other rather than collaborating at all. But so I think when you look at why you exist, if you're a global bank, you exist for your globality, right? Now that globality, it's not visible to many people how it helps Indian. If let's say you are a student wanting to go abroad to study, right? I mean, global banks will be your natural default bank. If you need a credit card on arrival in UK or US, global banks are your natural default starting point. If you want to make acquisitions outside India, and I know very recently acquisition financing has been opened up, but if you ask any of the 200, 300, 400 companies that have made acquisitions, who has supported those acquisitions? You will find it is global banks. So is that a niche, or is that playing to your strengths, and is that playing to what you can do for your customers? Similarly, if you ask any company that has significant sourcing from outside India or exports to outside India, you would be surprised at how many of such customers use global banks or international banks versus their domestic peers. So like any other business, international banks or global banks or foreign banks play to what they think they are good at and leave things that they think others are better at or customers are better served at to others. And that's how over a period of time. But I would also add one more thing, that in particular in certain segments where international banks were dominant, let's say 25 years back, in credit cards, in wealth and so on and so forth, I think credit has to be given to the domestic banks. The local private banks and some of the better run public sector banks actually brought in the level of competitive intensity to such a high level that international banks, with all the distractions that you mentioned, post-financial crisis, etc., perhaps were forced out a little bit. So some of it is to play to our strengths, some of it is other people's strengths didn't allow us to retain some businesses. That's how I would put it.
Thank you. Mr. Singh.
So good afternoon, good evening. Thank you for having us here. I'll try not to repeat what has already been said, but if I take a step back and see the contribution of foreign banks to this amazing country, and we look at the catalyst for financial modernization, electronic banking first came in through foreign banks. The first ATM, the first credit card, the first LC, the first bank guarantee, the manner in which international trade was done, the risks that arose from many of the things we just spoke about, how to manage those. So international best practices were also brought to Indian banking and probably adopted by the Indian banks as quickly as well. In fact, when you look at many of the other developments that have happened in the country since then, and fast forward to now, whether it is dollar clearing in Gift City, whether it is advising the government of India on ratings for the country, how to upgrade the ratings for the country, all of that has been catalyzed by foreign banks. So foreign banks, firstly, I would say, play a very critical role in nation building, have been continuing to do so. And even today, when you look at, I don't know how you would categorize a niche, but if you say 40% of India's foreign exchange or the FX spot trades are done by foreign banks. Yeah, similar amount of FX hedges is done by India's foreign banks. If you look at it, the three of us sitting here maybe have 50% of the FPI assets under management in custody, right? So out of the $900 billion of assets under custody, foreign banks have 80 to 85% of those. So while playing to our strengths and also the natural ability to handle some of these transactions, I also think that foreign banks do a lot more than we would give credit to them for the scale and size that they have in India. Bringing foreign capital into the country, if you look at dollar bonds, just as an example, right? So $50 billion of dollar bonds done by foreign banks in just the last few years. If you look at So I mean, we can keep talking about this, but the fact is that disproportionate role in nation building, in financialization, in making sure that the best of international finance is brought to the country. I think that's how foreign banks have positioned themselves, not necessarily in a niche, as you mentioned. Uh, but at the same time, I think continued innovation that is happening in India is also being taken overseas by foreign banks.
Right. No, I completely agree with you that foreign banks have played a role in several aspects in nation building. That's completely agreed. But my point was to serve the enormous retail customers. So, do you think in the foreseeable future, foreign banks are ready or they are willing to reverse the trend, which Mr. Dave said that ceded ground to the private sector banks? So, do you see Mr. Singh going ahead? That the foreign banks may be gaining ground so far as serving the retail customers are concerned?
So as has already been mentioned, the Indian banking sector is vast and extensive, and therefore making sure that you play to your strengths is very important. So there is no point trying to compete with the State Bank of India in a particular city, but if your key customers are in 30, 40 cities in the country, then it's critical for you to be in those cities. But on the other hand, you will never get to the pin code penetration that an Indian bank can get to.
Right, right. The other point, if Mr. Dave, if I can say, the cost structures of foreign banks operating in India are heavily loaded towards allocated costs from the global headquarters. Does that hamper competitive pricing? Is that the issue? That you cannot price your product competitively with the domestic banks because of this constraint?
No, I think just so that what is allocated cost is understood by everybody in the audience, right? One is the direct cost, your salaries, your rentals, interest that you pay on deposits, administrative expenses, plus, I am HSBC, there is Citi, there is Stanchart. The people deal with us not because of the wonderful work we do only in India, but because of the brand halo and because of the governance structures and all the goodwill that gets transferred from around the world. So there is and the technology, right? We don't build our banking systems here, right? So they're common banking systems. So allocated cost, quite honestly, my sense is if we had to do the whole thing locally, in all probability might be slightly higher, right? Because the scale might not be able to absorb the entire cost of all those systems that you have here. But to answer your question more directly, is it because my cost base is quite high that I'm not competitive in certain markets or certain products? I don't think so. I mean, I can't speak for the other two, but the cost income ratio of most of the larger international banks is plus minus 40%, okay, which is at par with that of the local banks, if not better than that of the local banks or so. But also to take on your previous question, I think it's not a question of not wanting to be in retail. In whichever segment, whether it is corporate, whether it is capital markets, whether it is wealth, now as Indians become wealthier and they choose to invest, let's say, increasingly 1%, 2%, 5%, 7% of their wealth outside India, there'll be a natural market that will emerge for banks like ours, right? But if it's purely domestic, and we know in India it's a very, very competitive market, right? I mean, and therefore, maybe that's a segment where banks like ours might say there are better players to serve the needs of the customers. Right. But there are needs of the customers which we can serve better. So I don't think there's a niche as such. I think it's you play to what you can do justice to.
Right. Mr. Balasubramanian, would you like to share your views on this issue? The cost structures.
Well, we bring globality to India, and there is obviously cost for that globality. And as Davi mentioned, you cannot recreate everything that you have in our different markets that we operate. So therefore, there is a charge that happens. But then the right way to look at it is with the allocated cost and the direct cost, what is our total cost structure, and are we competitive with other banks operating in the country? And if you look at that metrics, then I can tell you that foreign banks are very efficient. Even if you look at profit per employee, if you look at revenues per employee, these are other metrics that we track. I think most of the foreign banks do pretty well. So to just say that, oh, there is a lot of allocated cost is basically looking at it in a very different lens. I think we have to look at it more on a consolidated basis and not allocated cost as a expense item.
Right. If you can also share with the audience, since the exit of retail business in India and wealth management business, what would be the Citi's main areas of operations or strategy for India?
Yeah, I think that's a very emotional topic because Citi was a pioneer in several retail products in India back in 80s, and it was a global decision that our CEO took 3-4 years back, where you need to basically invest in businesses where you're able to compete and scale up. And unfortunately, the cost of governance, the cost of compliance, as well as the scalability of certain businesses were not keeping track in terms of our overall objective. So India, as part of 14 other markets, Citi exited retail, and today we are basically a retail player only in the home market and 4 global wealth hubs. Now, in India, the way we are focused is, we exited the retail bank in 2023 March. So it's been a little over 2 years that we have exited that space. And if I have to share some metrics and numbers, our top line, which is revenues, only on the institutional business, which is what we are doing today, is 30% more than what the consolidated revenue in 2023 was across the institutional and the retail business. If you look at our profitability, that again is like, in the zip code of 30% higher than what was the combined profitability for FY23. If you look at our balance sheet size, that is again grown by around on the loan sides by 36% and on the deposit sides by 40%. And these are all published numbers. So therefore, what we have done is we have doubled down on the institutional business post the retail exit. Always the institutional business was highly profitable. It was crown jewel. Retail basically gave us the visibility and the brand. But in terms of focus in the country, that pretty much remains on the institutional side of the business.
Right. Mr. Dave, in a way, HSBC has turned the tide in India, because there was a time when the regulator did not give any branch licenses to any of the foreign branches, but you have now got recently 20 branches. You have shut down 25 branches, I think 6 years back. So what's the game plan now? Is HSBC beefing up India's retail operation?
No, I think, first of all, thank you for asking the question after asking him why he shut his retail business. It sets the context for everybody out here. I think the realization dawned on us 4 years back or so that the India of 10 years back or so is not the India of today. Okay, 10 years back or so, to the point PD also made, significant amount of wealth, significant amount of affluence, significant amount of NRI populations, significant amount of Indians who sent their kids abroad, significant amount of Indians who immigrated abroad. All that population was largely in the top 15, 20 cities of the country. And therefore, as long as you were present in those 15, 20 cities of those countries, you could do justice to the client franchise. But in the last 5, 7, 8 years, I'm sure the whole audience can agree, there's been an explosion of affluence, wealth, aspirations, ambitions from not just tier 1, tier 2, sometimes to even tier 3 cities. And as a business, our job is just to follow where the customers are. If the customers have moved from certain, or not moved, they have added in numbers in other cities. And that is what our thought process was. We are very grateful to the regulator for giving us the opportunity to serve customers in 20 new cities. With these 20 new cities, we will be present in 34 cities overall, and hopefully will be able to, for the foreseeable future, provide services which a certain section of the population of these cities, and mind you, these cities are also very large industrial hubs. So we can also provide trade, export, import, FDI, ODI kind of services there. So that was the thought process.
So is it safe to assume then you will double down, you will open more branches?
Well, I think right now the approval conditions are such that we have to do it over a period of time. So it's difficult to say what we will do when we cross the 20 number or the 34 cities number or so. But it is safe to say HSBC is doubling down in the country. That there is no doubt about.
So you will open these 20 branches over a few years period?
That's the condition, yeah.
Okay. Mr. Singh, Mr. Dave talked about the how the wealth created by Indians have grown over the years. Many more cities, the affluence, the people affluent people number grown. From Standard Chartered meanwhile Standard Chartered has the highest number of branches so far as foreign bankers concerned. I think about 100. Uh, would you focus on wealth management per se, or you're also interested in the lending business, growing your lending book? I'm asking this because you have sold your personal loan book, which was asset quality of which was pristine.
Yeah. So you've touched upon a very important point, but let me explain it to you in this way. If I have 55,000 or 60,000 MSME customers, why would I not bank the owner of that company as well? If all of us have some leg overseas, as we were talking about, then we are all global Indians. We may not be NRIs as in the classical sense, but we are all global Indians. We want to invest money overseas. We have somebody studying there. We have a relative. We need to send or receive money, and so on and so forth. So things have changed very radically in the last few years. Along with a lot of digitization and adoption of internet banking and a lot of other digital channels, as you can see. So the banking system in India itself, for example, 90% of I think it's higher than 90%, 90% of all our customers are on digital channels, and 95% of the business banking customers are on these digital channels. So really, do they visit a branch on a regular basis? Probably not. But do they require a branch? Probably yes. And that's the fine balance that one has to maintain. And many of these, for legacy reasons, there were branches in some places, they were not in some others. So you may need to move these around, you may need to add or subtract based on the business opportunity and the demand from the customer that you have. So the idea is to serve the customer and to serve as per your strategy and your ability to serve them. Like, I think you can't be everything to everyone, but at the same time, if the aspirations that we see can be served by us for the global Indian, for the business owners, for those who are professionals, then I think that is exactly the segment that we are chasing.
I'm asking this because there's a huge buzz in the market. Standard Chartered will scale down the branch presence. Can you clarify?
So if we have branches in close proximity to each other, like I said, then it is fair to assume that some of these will be merged.
Okay.
So if that is what we are talking about, then yes, maybe there may be some. We've just inaugurated our largest Eastern India branch. So that also shows you that we are growing where we need to. The formats of the branches have changed, and again, that is because of customer requirement. They want large format branches. They want secure and exclusive place for different categories of customers. Those who come from overseas require a completely different touch and feel, and therefore they require a separate place in that branch. So the branch needs to be a large format branch. Now this could be different for different categories and different cities, and that's why you need to mix and match and satisfy your requirement of the customer.
Do you have a number in place? What is the optimal number of branches we operate?
No, I don't have a number in place,
Okay.
but fair to assume that there will be some rejigging that will happen, which is normal in the course of normal business.
Right. The next issue I want to come to is that since foreign banks are predominantly in the advisories business, M&As, deals, now RBI interestingly has opened up the financing of M&A, acquisition financing by the banking sector. Mr. Balasubramanian, how do you see the development? Do you think it's a big opportunity for foreign banks?
You know, as Davi mentioned at the start of the session, foreign banks have been doing most of the acquisition financing that was happening in the country for the last several years. And that was one area that was not available for the local banks, be it government banks or private sector banks. And earlier this month, RBI came out with the circulars opening it up for even the local banks with certain guardrails, which is a positive development because the way at least we are seeing opportunities and activity in the market, India is actually going through a big tectonic shift in terms of how the corporates are looking at it, how the promoters are looking at it, how the next generation is looking at it. There is a lot of private equity money that is waiting in the wings to try and see opportunities to invest. And if you look at India's position today in the world economy, I think despite all the negatives and headwinds that we keep talking about, but if you have to choose one place where you want to be residing and doing business, it is no doubt that India is clearly that place, which then means that there is going to be opportunity set that is actually going to open up over the next several months and years. This regulation is actually going to be very positive for the country because there are new pools of capital that will open up. Ability to access different types of financing will be better for companies which are basically looking at domestic consolidation, or if you're thinking about external parties coming in and looking at acquiring in India, you can potentially have access to large pools of rupee liquidity as well. So I think this is, which also means that, it's going to be a little bit more competition for all of us. But in a mature market, you cannot stop competition from coming in. You have to create a niche for yourself and you have to play the best game so that, you win. So we actually are quite happy that, this is eventually happening.
Mr. Dave, do you think foreign banks will have an edge over domestic banks when acquisition financing?
I don't think I would use the word edge. I would certainly use we have an advantage that we've been doing it for a while, right? So, I mean, I heard the senior most banker in this country also mention that expertise simply cannot be acquired simply because regulations have changed, right? I mean, you need to acquire it. I think you will see partnerships taking place because one bank might have access to the acquirer, another bank might have access to expertise in acquisition financing or understanding that, especially if it's cross-border acquisition, then what are the laws of that country, competition laws, market laws, banking laws, etc., etc. But I think I agree with Bala completely that, sometimes you don't know what comes first, chicken or egg. Just the fact that acquisition financing is available, it means acquisition financing which has largely been restricted, or acquisitions which have largely been, the domain of the top, let's call it top 500 companies, okay? Because the people below that 500 just didn't know. They might have a very good idea of a Polish company available, but they had no idea who's going to give them the, let's say, the $30 million, right? Which is what the ticket size would be there. So, in fact, the availability of capital should increase the amount of business and should increase the amount of opportunities for the country. And given all the talk that the country has about the need to excel in manufacturing, and we know that, particularly in places like Europe and parts of Asia, you have manufacturing facilities which are now available at prices which are at significant discount to what you get locally. And then you have financing available. And then you have the Indian entrepreneurs who can squeeze out even further efficiencies from that low investment capital also. So this can only be good news for the country. This can be good news for the corporates. And this can be good news for the banking industry only, overall, including foreign banks.
But Mr. Singh, do you think overall the regulatory environment for banks, all kind of banks, has become more conducive now as compared to what it was earlier, or you think it has just become predictable?
So firstly, I think we must acknowledge our regulator is one that has led by positive disruption. Had it not been for what the regulator has done in positive disruption, we would not have the kind of systems and payment systems and other things that we have today. So that's the perspective that we should look at it from. Second is, it's a point in time that the regulator has to respond to the market requirements, whether it is to tighten regulations or whether it is to promote business. And that's what I think we are currently in the phase of, where the ease of doing business is what the regulator is conducively looking at.
Mr. Balasubramaniam, what do you think? The environment is done with conducive, ease of doing business, the banking sector I'm talking about?
I think ever since financial crisis, which is like more than 10 years back, this industry came under severe regulations in India, in most other parts of the world, because of all the excesses that happened till around 2007-8. And I think it carried on for a reasonably long period of time. Now, if you think about what is happening in most markets, including in India, the government is very clear that, it is important to put the guardrails in place, but that should not obstruct the ability to do business or ease of doing business. So a lot of positive measures have opened up in the last at least 2 quarters. And there is an open discussion that is happening with the regulators across the spectrum. And there is a general sense of positivity in terms of You come and bring your problems, and we will try and see whether this can be solved and in a manner which doesn't increase the risk in the system, but at the same time, ability to do business and cost of doing business becomes much better.
Right. I mean, do you think that the recent two large transactions in the banking space which were announced, I mean, do you see this in this context? And then what is your view on this? That foreign investors, foreign banks are eyeing Indian banks for expansion. How do you see this?
If you look at the Indian financial services sector, this was probably one of the most regulated sector that the country had. And in the last at least a couple of years, and more so in calendar 2025, we are seeing a lot of interest and activity happening in the space. There are lots of pools of capital available in Japan, Middle East, Canada, and few other locations, right? And they are all basically looking at one, ability to scale up, and two, ability to participate in a growth which continues to be very rosy. And as I mentioned earlier, India is clearly one market where if you look at the runway ahead for the next 10, 15, 20 years, for all the demographic positivities that we keep talking about, the runway continues to be very, very positive. So you need to be participating in this game. And if you look at valuation in this sector, I think there are still assets available in this sector which are quite well priced. So that's one of the reasons we've been involved in two of those 3 or 4 transactions that happened recently. And I can tell you that there are several interests that we are getting from investors, strategics, as well as private equity, trying to look at opportunities in India. And also, if you look at the narrative that we are hearing from the regulators and the government, they're basically saying that if India has to become one of the developed countries in the next 20 years, do we have banks of size and scale which can support such large economy and such large corporations? And if you compare our banks versus what is there in China and few of the other emerging markets, we don't have banks of that size and scale. So therefore, there is also consolidation that is going to play out in the economy over the next few years. And I think this is all a preparation of that.
I mean, Mr. Dave, beyond the banking sector also, I mean, India remains one of the few bright spots so far as deal making is concerned. So I mean, what is driving this relative buoyancy, and do you think it's sustainable?
I think what is driving this buoyancy, I guess it's like beauty, it's in the eyes of the beholder. So I can give you my view and somebody will have their view, but when India looks much more prettier when you're outside India. Let me put it this way, okay? When you're in London, when you're in New York, when you're in other parts of the world, the attractiveness of India really, really shines through. The demographics, which Bala spoke about. You look at anything, right? Number of, 1.4 billion people, how many have credit cards? And you think, my God, this is a country in which 500 million credit cards will be issued in the next 200 years, next 25 years. And that's like the number of credit cards in all of the West, right? Similarly, if you look at number of medium and small size businesses, which we know will formalize very, very rapidly. Access to finance, access to international markets, access to proper labor, access to, all the things that happen when you formalize. So I think, given the GDP growth rate, given the demographics, given the very well regulated financial system, and given the very strong political and economic and financial stability we have, it should not surprise any of us that India continues to remain on the radar of all the Fortune 500 boards. I mean, I cannot imagine a single board which does not spend some time in either every board meeting or periodic board meetings thinking, are we sufficiently present in this country? Should we acquire something? Should we grow organically? Should we do something to our existing business and things of that nature? And it's for us as people in this country over the next 20, 25 years to ensure that we keep running the country in such a way that all those promises come true, because as the country continues to do well, so will the capital flow in.
Right. Since you are all foreign bankers, I cannot let you go without asking. We are in the middle of an IPO frenzy. So, as a foreign bank, Mr. Singh, you can start. How does it help your franchisee, the IPO frenzy?
So I think you played straight into my hands. I just spoke about how we facilitate investors coming to India. In the recent IPO that happened, which was probably, we got probably 7 times of the subscription coming to our bank alone as a custody bank. And like I said, between the three of us, we probably have 50% of that market. So for a foreign bank facilitates the flow of foreign capital into the capital markets in India. And it's a great role we play, and the more IPOs, the better for us.
Mr. Dave?
I think the ecosystem of capital markets in India is a fantastic opportunity for everybody, including the international banks, including the local banks. PD spoke about the fact that, when international investors come, they come in via their custodian banks, but there's also the opportunity to be the banker to the issue, right? I mean, the reality is, if you see all big deals, any deal above, let's say, $300, $400 million or 2,000 crores or so, typically you will find a couple of, if not more, big international banks. And those big international banks are doing a job of providing credibility and narrating the story of the Indian company and the Indian market and the Indian economy to international investors. So that's a role you're performing. So there is the opportunity, yes, and there is a profit, yes, but there's also a role you perform. It just doesn't come just like that. And similarly, to banks like ours that have a large mutual fund business, that's another opportunity for you to channelize people's wealth and savings and create wealth for our individual clients, etc. So the IPO market is one of the great things that's happened in India in the last 4 or 5 years, because A, the IPO market, B, I think the wonderful mutual fund Sahi Hai campaign. We all know that in the absence of the domestic savings channelizing itself into the capital market, with the amount of foreigners selling, I think we might be all having a very different mood music even at this event today. So let's hope it continues to do well, but let's also hope that we don't have bubbles. As long
Right.
as it's sensible, as long as it's well educated, as long as all the risks are told, and it's long-term patient capital that you're generating rather than quick money, I think it'll be great for the country.
Are you indicating about the astronomical pricing of some of the current IPOs?
No, like I said, see, pricing is like beauty. So I am not going to say whether it is astronomical or too low or so. So if somebody is buying, he thinks it's too low. If somebody is selling, he thinks it's too high. So I think on prices, it's best to speak about prices with the benefit of hindsight. So we'll talk after 1 year.
Okay, okay. But the IPO pipeline next 2 months, what is your prediction?
I think all by all accounts, 2025 promises to be the largest IPO year of all time for India, and the next 2 months will be very, very busy. I know that the ECM teams, the equity capital market teams, the merchant banking teams, the equity sales teams, the research teams in every house, I think frankly don't have time right now to rest at all. It's like going from one transaction to another, but at the same time do justice to all the mandates that you have. So yes, it promises to be a very, very busy next 2 months.
Mr. Balasubramaniam, it's equally must be busy for you.
Yeah, absolutely. If you look at the last 10 years, the number of billion-dollar IPOs that have happened in the market was probably 5 or thereabout. If you look at this year alone, starting Jan till now, and as I look at the next 3 months, there are between 9 and 10 IPOs of $1 billion that is going to happen in India during calendar 2025. That's a significant shift in terms of the size of transactions that is happening in the Indian market. And what changed in the market over the last 5 years is the financialization of savings, because a lot of money that is actually moving into the capital markets, both secondary and primary. And earlier, a large part of the proceeds used to come from the from the foreign investors. Today, frankly, if you think about it, every single transaction that is happening, we have a massive participation coming in from domestic mutual funds, as Devi mentioned. And also there is a very large retail play that is there. So despite the fact that foreigners have basically pared down their exposures in India over the last 2 to 3 quarters, but still the market continues to be quite strong thanks to the surplus money that is flowing into the capital markets. So with this tailwind as the background, my sense is that 25 is going to be a very, very strong year, probably the best till now. But even if I look at the pipeline into the first half of 26, assuming the market continues to be constructive, I would expect that we potentially will have this run for a longer period of time.